Good morning and thank you for joining us today for the American Pacific Borates Investor Webinar. My name is Jane Morgan and today I'm joined by our Executive Director, Anthony Hall. So the majority of the questions that were sent through have actually been addressed in the operational update. So to tell us more about the company, I'll pass on to our Executive Director. So over to you, Anthony.
Fantastic. Thank you, Jane. And our apologies that Mike Schlumberger, our Managing Director, is not able to join today. He's stuck on site. We've actually just had our new chairman spending a week with Mike, and I think that they've been stuck on site en route back to the office, so apologies there. So the way that we thought that we would address it is maybe just provide everybody with an overview of the company and the project. And then we've provided an operational update in the latter sections, and most of the questions that were sent through are actually addressed in that operational update. So from an investment highlights perspective, and I think that this is the thing that we really like to focus people's attention on, is that the project, our Fort Katy borate mine, does have exceptional financial metrics, but the exceptional metrics are essentially driven by very low upfront capex, driven by very high margins, and the margins are essentially driven by the fact that we do have what we're calling a co-product. So yes, there's boric acid, but in addition to that, we produce SOP, and our revenue split's about 54% SOP and about 54% boric acid and about 45% SOP. So there is certainly a co-product split that essentially drives a lot of the financial metrics. The technical risk is well understood. The ore body has been previously mined before for 5.5 years, so we're not trying to do something that's never been done commercially. Multiple revenue streams, which is another important de-risking element to the project. Visible revenues, so we're in construction at present. We expect to have initial revenues or first production in Q3 next year, so that's inside 12 months. We consider both SOP and borates to be strategically valuable on the basis that there aren't a lot of borate deposits globally, and the fact that there's not a lot of SOP production that has the same characteristics as ours. From a mine life perspective, we're talking 23 years in our enhanced DFS in full production. We do think that there's some upside down into the southeast with respect to the resource, but it is still is multi-generational. And I think the final thing, and we sort of discuss this a little bit later, is that we really are targeting a significant EBITDA of $438 million per annum in the first full year of production. The context on that is last year, SQM, we would have been 2/3 of SQM's EBITDA. And I think that people have missed the scale that we're talking about with this project. I won't go into a lot of that information. We can take that as read, but I think the important thing is that our new chairman that came on the 1st of August. The important thing for us is that David is based in the United States, in Salt Lake City, 10 hours drive from the project. But he has been directly responsible, and I say directly responsible when he was with Rio Tinto primarily, for developing, constructing, and operating 4 mines. So there's not a lot of people with that skill set. And nor is there a lot of people that are based in the United States and are effectively, working with the team. So he's come in, he's actually with Mike on site this week, which is just fantastic. We like to just discuss borates. About 3 weeks ago, we had a little bit of fun when Tesla talked about their new battery technology. And interestingly, the new battery technology includes borates. Very few sources of borates. The Turkish government control about 60% of the market from their 4 mines. And Rio Tinto's mine's about 100 kilometres from us, and that has about 20% of the global market. Outside of that, you get predominantly byproduct producers from Brian's operations. The demand is fantastic. We say a little bit of, there's a little bit of borates in a lot of different things, so it's not just driven by a couple of different things. Primarily, you've got ceramics, you've got fiberglass, and you've got fertilizers. But in addition to that, we talk about, say, Linus and the rare earths thematic. Permanent magnets now have about 16% borates in them. We talk about electric vehicles. So now you've got it going into the battery, you've got it in the drivetrain, you've got it in the airbags, you've got it in the windscreens, and you've got it in the detergents that wash the electric vehicles. So space shuttles, nuclear power plants, solar PV modules, wind turbines, phenomenal broad uses for borates, and a lot of uses are non-substitutable. SOP, a specialty fertilizer, essentially it's used for crops that are chlorine sensitive, so that they can't effectively absorb all of the chlorine associated with the traditional potash called MOP, and also in areas where you don't have high levels of rainfall, so the chlorine associated with the MOP doesn't wash off. Remembering also though that MOP is a micronutrient, as is borates a micronutrient. The US market will come to a little bit later for SOP. Borates globally, we're targeting effectively to be the third largest producer of borates in the world, but that sees us with about 6% of the global market. Over the last 7 or 8 years, it's been growing at 5 to 6% per annum, and I think with a lot of these new uses, it's hard to see that dying down, especially for the calcium borates that we have. From an SOP perspective, you can see that we're essentially targeting to be half of the North American market in full production. Initially the target market is California, and being on the doorstep of the largest, effectively a very large agricultural producer, gives us a massive advantage into that Californian market. I like to talk about the flow sheet associated with the mine. We talked about the co-products earlier. There's really not a lot of trickery here. We basically have a Mannheim furnace that sits at the front. There is some, I guess, misinformation with respect to Mannheim furnaces. The main issue with Mannheim furnaces is not the pollution, it's what do you do with the waste product called hydrochloric acid. And we actually have the Mannheim furnace which produces SOP, but we actually need the hydrochloric acid. And that beautiful thing about the hydrochloric acid is we then use that into our borate process. We pump a very weak hydrochloric solution into the ground, so 3% hydrochloric acid, 97% recycled water. That then is a solution mine underground, so it's effectively a salt horizon that essentially beneficiates underground, and we pull up boric acid from underground, and then we essentially take out that boric acid via mechanical evaporation. So it's called crystallizers. It's a very well understood off-the-shelf technology that generally sits on the end of brine productions in any event. The enhanced definitive feasibility study, we put that out in April. That's what we're currently building. I guess that what we like to do is to draw people's attention to the NPVs associated with some of the latter phases. So for phase 2, we've got an NPV8 of $1.71 billion US dollars. And we've got an EBITDA in the first year of production of 242 million. I'll come to that, in terms of what does that mean. In full production, we're targeting, as we said earlier, the 438 million US dollars, which makes us a very significant producer of fertilizer company, but a very significant producer of specialty ferts and micronutrients. What we've done with our financial model, and this is something that we probably haven't communicated well enough, but we've taken our pricing assumptions, and rather than using the pricing assumptions that we have, which we think are very defendable pricing assumptions, we've said, what happens if we plugged in the operating cost of Rio Tinto with respect to borates and the operating cost of Compass Minerals with respect to SOP? And what would that do if we assume that that was our selling price? And assuming that that's our selling price, we end up with an NPV8 of still US $1.368 billion and an IRR of over 30%. So that's a price deck at the assumed price received, or average selling price, at the operating cost of our North American peers, being Rio Tinto and Compass Minerals, which is the only producer of SOP in North America. So it's a very robust project that I'd like to say is unbreakable. In addition to that, we talk about the other drivers of the project. The micronutrient market is growing very substantially as people move more towards bespoke application of fertilizers. You do see that we have a negative OPEX of $19 a tonne, and that's associated with the co-product. If you view us as an SOP producer, we've got a negative OPEX of $190 a tonne. The multiple revenue streams, 54% boric acid and 43% SOP, with a little bit of gypsum going to the Californian agricultural market as well. The market entry strategy is very important because we're an industrial mineral producer. It's hard to get binding real offtakes because essentially they've got to start using our product as opposed to using product that's currently being supplied by one of the two global majors. So what we've done is deliberately right-size it to begin with. Very small initial boric acid operation gives us the opportunity to put product into the hands of our potential customers so they can test our product, they can work with our product before we progressively start to build out a much larger operation. There was discussions in some of the questions with respect to offtakes. For the financing that we have secured and for the financing that we were in negotiations with, we did not require offtakes. And the reason we did not require offtakes is because of the robustness of the project and effectively the co-product and the margin that's associated with it. So the financiers took the view that we would always be able to sell our product given our cost of goods sold or operating costs. From an operational update perspective, and I guess I was hoping that Mike could provide a fair bit of colour on this, but the site works are certainly ramping up. Those are pictures of the site. That is us receiving our solvent extraction equipment, which is part of the boric acid process. We now have the water and the energy infrastructure in place, so that means the electricity's come to site, but also we've taken the water pipelines to site. Water being a particularly critical issue, and we do have the water that is necessary to be able to operate the 3 phases of the mine. The detailed engineering and construction drawings are ongoing, but expected to be completed shortly. And importantly for us, first production remains on track for Q3 CY 2021. It's a pretty modest initial operation, but then it obviously builds out to something that's very, very significant in a global context. From an organisational capability perspective, and this is pretty important, we're very conscious that we do need to transition from developer to producer. The new chairman appointed, which we think is particularly significant, especially given the pedigree of David and his 18 years at Rio Tinto. In addition to that, we expect to hire 2 recruits this month, being a process engineer and a health and safety officer. But our philosophy continues to be a very modest owners team to manage the construction managers, as opposed to creating a larger team where we effectively act as the construction managers. We will be Q1 next year focusing on operational readiness, and that's certainly Mike's main area of expertise, having run some of the largest mines globally, the Lanigan Potash mine being one of them. So we're very well equipped internally, 1, to manage this construction process, especially with David coming on, but 2, then to manage the ongoing operations with Mike and his significant background in managing mines or operating mines. From a sales and marketing perspective, we've talked about the crop trials. That's a lovely picture. You can see that it's real. We do, and this is answering a question earlier, we do expect to sell 5 distinct products. So we're splitting boric acid into industrial boric acid, if you like, and agricultural boric acid. We will have a standard SOP product. We will, in addition to that, have what we're calling an enriched SOP, and that's effectively the SOP plus B. Mosaic currently sell what they call Aspire, and I do encourage people to go and have a look at that website, because it does talk to what they do with MOP plus B, and it does talk to the advantages of having B mixed in up front into that fertiliser mix. So it comes out in a granule where it effectively does have MOP plus B, which is exactly the same way for us. We're going to have SOP plus B mixed on site in a granular form, and it's very, very difficult to replicate that fertiliser, and we're expecting it to be pretty special. And our 5th product is gypsum, which effectively goes into the soil amendment market in California. The branding strategy is being worked on, and we expect to have the branding strategy approved this month. That will then dovetail into websites and starting to create an initial digital presence, plus more broadly a presence. The crop trials are progressing well. We have got some initial results that we're happy with. The University of Connecticut summarising those results at present. We've got various groups working on market entry strategies. We've partnered with a borate distributor, but in addition to that, we've got 2 groups working on fertiliser market entry strategies. And obviously our target market is California. And I come back to the right sizing of the operation to start with, where we've got a very modest initial operation that builds out into a very significant global fertiliser business. From a financing perspective, the AGM is targeted for early October, which will approve, we expect, the US $30 million convertible note financing. The attention is now starting to turn to US sources of debt for financing the additional phases. we're very confident that the majority of the additional phases will be traditional project finance debt, as opposed to to some of the non-traditional debt that is normally associated with initial phases. The discussions have been positive. And with respect to dual listing on New York, that continues to be under consideration. Our expectation is that that is a project we will be looking at first half next year. And we certainly do have the intention of dual listing in New York, and there's lots of different reasons for that. The main reason being that we are based, in California, and we're effectively a US, fertilizer project. But in addition to that, the multiples that US companies receive certainly suggest that there's lots more additional value for our shareholders in a US listing. From a marketing perspective, a lot of people are saying, "Oh, look, you've done a great job. The shares were 30 cents 3 or 4 months ago, and now they're 80 cents. Isn't that fantastic?" I think the way that I view it is we have been a permitting story up until now. And what I mean by that is the focus has been on a very binary outcome. Do we get permitted and we're worth something, or do we not get permitted and we're worth nothing? What we now need to do is we now need to work on what I'm calling closing the gap between our market capitalization and our project value. And the graph at the bottom gives you a sense, the undiluted market cap, the fully diluted market cap, which also incorporates the conversion of the convertible note, just so that we're not trying to hide our fully diluted cap. So, the NPV of phase 2 is 2.4 billion Australian dollars. Effectively that suggests that on a fully diluted basis, we're currently trading at a fraction of that. But the EBITDA in phase 3 is 438 million. In Australian dollars, that's 626 million on a 70-cent exchange rate. And we're targeting effectively, in the US, we would be trading on a 10 times multiple, consistent with the producing peers that trade on New York. So we've engaged a US investor relations firm. We're very much focused on starting to introduce the project to North American investors. We're working obviously with credible, very, very capable investor relations firms in Australia, and the focus now moves from, we don't need to talk about this is a permitting story in California anymore. We can now start focusing people's attention on the value of the project. And the first thing there, and I keep coming back to, is we think the market has missed the fact we are targeting $438 million US a year in EBITDA. This is a very, very significant global fertilizer project. Next slide's quite important for us. It does put that into some context. From an EBITDA perspective, we're not far off what SQM did last year in terms of a target, and we're greater than Compass, we're greater than Turson-Dello, who effectively are producing peers. And from an Australian or an SOP developer perspective, there's just some context around what SOP developers are targeting in an Australian context, bearing in mind that we do have the benefits of having the boric acid that effectively drives a lot of the economics. The graphs there are important as well, on the basis that fertilizer companies in New York do trade at 10 times EBITDA. You can see that with Albemarle, SQM, Compass, Nutrien, and Mosaic. Or alternatively, let's look at it on a price to earnings multiple perspective, and they're trading at 20 times. So that's our target. Our target is this slide here in terms of how do we move from people viewing us as a permitting risk story to people viewing us as what does success look like, and what happens now that we're in effectively construction of phase 1A. Over the course of the next 4 or 5 years, we do expect to be in production of a very significant global fertilizer project, spitting out phenomenal EBITDA margins. The final thing for me is I do like to just focus people's attention on the production that we're targeting, but also on our operating costs, just so you can understand the robustness of the project. We have negative C3 cost associated with either boric acid as a primary or SOP as a primary. So negative $19 a tonne as a boric acid producer, and you can see that's driven by the SOP byproduct credit. Whereas if you view us as an SOP producer, we're effectively negative $191 a tonne C3 cost, driven by the byproduct credit associated with the borates. So we come back, and I think the only question I don't think we've answered, but I'll answer in a minute, but we come back just to reiterate what we really call our value propositions: low capex, low technical risk, high margin, multiple revenue streams, visible revenues only 12 months out. significant strategic value associated with the micronutrient and specialty ferts that we're going to have, multi-generational, and we're also targeting a globally significant EBITDA. The final question that we haven't addressed that came through was, do we think we're a takeover target for Rio Tinto? And the short answer is unlikely. And I think the reason for that is that Rio generally look at larger projects, given the overhead and everything else that's associated with Rio Tinto projects. But our focus is not on do we get taken over or do we try and play for a takeover. Ultimately, our focus is on how do we, as an organisation, move as efficiently as possible to the completion of phase 3 and the EBITDA target of 438 US, which essentially presents an enterprise value based on US producing peers of 6.26 billion Australian dollars. And that's a data point that is associated with a DFS that is in the public domain, dated the 16th of April 2020. So I think this is very real. We are in construction, we are fully permitted, and we're very excited. I think that it is now about us building out the right organisational capability, and then ultimately Mike and the team in California delivering and driving a fantastic, very, very significant global fertiliser project. Thank you.
Wonderful. Well, thank you. Thanks for that, Anthony. Look, I think we've covered all the questions that have come through. We have actually recorded this presentation, so we will share it on our website. But thank you all for joining us today, and please feel free to reach out via the contact details on our website should you have any further questions. Thank you.
Brilliant. Thank you.